All right, so I'm going to mute everybody. Okay, good morning, everybody. I think we have everybody submitted at this point. We're going to have a couple stragglers here in a second. So I just want to take the opportunity to remind everybody that this is technically a Zoom meeting, not a webinar. So you will have an opportunity to chat with one another. You know, I don't think there's anything we can necessarily do about that. I'm just going to share my screen, so there's no need for video here. If you want to submit questions, they should be chatted directly to Stephen Moyer, the co-host. He'll be taking care of them as we go. Again, for the purposes of today, I'm assuming that you have applied for the loan. If you're in the process or have not been approved yet or anything like that, I would say that you're still going to get something out of today. So we are attempting to record this session, and it would be available on the Indian Valley Chamber's website at some point, and hopefully I will have a recording of it as well if that's of interest. So I see a couple of you on video. Just to make sure everything's working right for you guys, either nod or wave your hands or something, chat in for me. Okay, so it looks like everything's going good. Okay, so we're going to go ahead and get started. I have Steve Moyer here, who is co-hosting with me today. And I want to let everybody know that we're actually making a little bit of history together in that it's April 16th, and you have two CPAs in the office working on the 16th. Steve, I don't think that's happened in the 21 years I think I've known you, and because I haven't been here either. So I think that's a fair assessment. This is our first hosting experience, so I'm almost positive there's going to be a glitch somewhere along the way. So again, if you could have a little bit of grace, and we've also maxed out our capacity for our very first hosting session. So again, we're kind of making history 3 times over here this morning. So thanks for joining us. As I mentioned, I have Steve Moyer here with me. He's the director of our tax services. Again, if you have any questions throughout the presentation, please chat to him directly, if you don't mind. And then obviously I'm here as well. It is Throwback Thursday, so there I am with a haircut. You know, I'm gonna maybe attempt to do something over the weekend here with the family to get my haircut here. So really quickly, you know, as far as introduction here, we have phase 1, 2, and 3. You keep hearing of the phases. Phase 1 was just money that was asked to be allocated towards this. Phase 2 was the Families First Corona Response Act that was passed on March 18th. We're going to reference this just a little bit today, but I need everybody here to understand that if you have under 500 employees, they now have PTO and FMLA, paid time off, and family medical leave as of April 1st, as it relates to the COVID-19 virus, if you will. You may sit here and say, I only have one part-time employee. That can't possibly be applicable to me. But I would tell you that, yes, it is. If you're not aware of this, please talk with your payroll service or your accountant. But I'm telling you, if you have under 500 employees, by law, they now have PTO and FMLA. Again, this would be reimbursed by the government the way it works. So it's not as a cost to you, the employer, but there's logistics that you would have to go through to make it happen and get reimbursed. Phase 3 is the CARES Act. While the PPP loans are the flagship, if you will, of the program, there are many, many other individual and business provisions included in there. So again, hopefully you're on our constant contact emailing list. We tried to get everything out as quickly and in somewhat summary form as we could to give you the highlights and let you manage your business and kind of know what's going on. So, but again, the purpose of today is we're going to talk about the Paycheck Protection Program. So really quick, before I toss it over to Steve for a little, keep in mind everything here is happening very fast. Everything's happening very fast here. The public's, and I've told a lot of you this on the phone conversations, they're getting to see something they don't normally see, in that when tax laws passed, it's generally affected at some point in the future. And when the tax laws pass, then between when it's passed and sometime in the future, there's a period of time. And in that period of time is a public comment period where the public gets to comment on it, just like it sounds. And then they will take the comments and digest and put out guidance and put out interpretations or revise the code. You'll get some legal opinions, you'll get revenue procedures. And then hopefully by the time it gets implemented, you know, there's a good idea of what you're implementing. That's not happening here with the stuff that's effective or being passed for the virus. It's effective immediately. And I'm sure all of you have experienced, you know, a lot of questions and confusion out there. So as a result, there's a lot of misinformation out there. So just be aware of that. Don't go by the word on the street. You know, try and talk to somebody that's in a position to know a little bit about it. But more importantly, there are questions with absolutely no answers at this point. So I sat in on a number of webinars over the past couple of weeks. I sat in an American Payroll Association one, an APA. The very first thing they said is there's no answers. We sat in with another prominent accountant that does national education and is a contributor for Forbes and stuff. And the very first thing he said is there's no answers. So just be aware, we will tell you our thoughts and go through that today as best we can. But again, if we're talking on something that is not expressly stated, we will try and let you know that. So, and then even what's been issued, there is contrary. You know, if you look here, it says one thing. If you look there, it says another. In additional further guidance. So, again, they've got to clean it up and put out some clarifications and stuff. We expect that to happen at some point, but here we are in the middle of the program already. So, so again, today we'll do our best in terms of what comes next after you have applied now. So, Steve, I'll throw it over to you if you have any further comments to set up, or if you want to take the next slide. I know there are a couple of topics that you've been keeping your eye on for us. So.
Yeah, thank you, Brent. I just wanted to say good morning to everyone that's on the Zoominar this morning. Looks like we are up to 93 participants, so there's still a few more to get signed in, and the questions are coming in rather quickly. So we'll try to answer some as we go, and we'll maybe stop along the way uh, to answer some of those specific questions as we go. And others we may have to get back to you and just we'll try to keep track of all the questions and respond as best we can. Brent, as you said, there is a lot of it seems like we're like three weeks into this, I believe. The PPP program, since it was first announced, and it seems like it's been months already, and so many things have changed. I kind of hate to say this, but I kind of live in the tax world, and for me, I can usually go into the tax laws and find an answer. This is a little different animal because the answers aren't available at this point. So we just have to use our best judgment and hope that they are clarified as we go. I do know that I have to give some kudos to the American Institute of CPAs, as they've been pushing to try to really get some clarification and get some common answers out there. First of all, to the banks, because I know when this was first put out there, the banks were coming out with their own calculations. The payroll companies, the big ones, ADP, Paychecks, all had different ways to calculate what makes up payroll. So anyway, but yeah, this is we're just trying to get answers as we go, and we keep passing them on to our clients, and those people that aren't our clients, we'll try to get those out, answers out to you as best we can also. So yeah, I see that we just moved to the next slide. So the IRS just came out, I believe it was 2 or 3 days ago, with a new notice that basically extended or pushed back the due date, I guess is what you would say. They're technically not extended because we have a new due date now, and that is July 15th. There was an issue with originally when this date came out, that there was still the second quarter estimate for personal tax returns was still on June the 15th, but that has been corrected, and it's now also July the 15th. So this applies to most filings that would occur between 4/15 and July 15th. So personal returns, trust returns, estate tax return filings, all of those that fall into that date range are now due July 15th.
Good.
And then if that's not enough time, at that point, we can also, file for an extension up until October 15th. Just yesterday, 2 days ago on the 14th, we got some regulations on the, I'm sorry, this is on the self-employed eligible for the unemployment. Unfortunately, self-employed people, well, the good thing is self-employed people are eligible for unemployment now with the CARES Act that was passed, $600 a week. The unfortunate part is that Pennsylvania unemployment website is still not up to date and accepting self-employed or contractor unemployment claims. There's no way to do it in Pennsylvania. And this was, I know I heard President Trump talk about this. They wanted the money to go directly out to these people, but Congress wanted it to be dispersed to the states to be able to go through their normal unemployment process. Some of the states are not, the websites are not up to date technically, and unfortunately Pennsylvania is one of those. So hopefully this will be up and running, in the next week or so, but at this time it's not yet available. All right, I think you can go on.
Okay.
Brent.
Thanks, Steve. I was just trying to take care of a couple questions. I would, again, ask everybody if they could chat their questions to the co-host, Steve Moyer. That would be appreciated. So switching over to the PPP loans, what we're seeing at this point is we came to this conclusion a little while ago, but we're advising all of our businesses that want to apply. And if you remember in the beginning, in the application itself, there was a statement that you had to certify that, quote, current economic uncertainty makes this loan request necessary to support ongoing operations of the applicant. And to date, there has been absolutely zero guidance on what that means or how you measure it. So a lot of people were kind of like, oh, I'm fine right now. And the conversation turned to, are you uncertain at some point in the future? I had a conversation with one of the directors here, one of my fellow directors, and we were talking about this statement, and he just kind of chuckled and said, everybody should be uncertain. And that's the truth in a way. So again, there's no measurement in terms of what uncertainty means in terms of you certifying that you need the loan. So again, at this point, I don't know that anything's going to really come out on that at this point. So again, we're pretty much advising everybody that wants to apply, regardless of cash in the bank or profitability or anything like that, because there's absolutely no guidelines. So you've heard, again, the money's running out. That was the big story yesterday. I'm sure they're going to put some more in, but if you haven't applied yet, I would encourage you to still apply, because, if they do or when they do get additional funding, hopefully you'll be in your bank's queue at that point. Originally, I had a conversation with a lot of you that are my clients that, you know, we had to be careful with when you actually started your 60 days, and we'll get into this in a second. But once you receive the funds, you have 60 days to spend it on approved expenses, right? So let's take, for instance, a business, a restaurant. Again, it's very easy. They have a very short revenue cycle. So again, we're all in this shutdown, lockdown, stay at home, whatever it's called. There's people that have their businesses shuttered and are basically doing zero sales, right? So the government's going to give you this money to pay your employees, but you're in essence paying your employees to sit home and do nothing, which is fine. That's the intent of the program. But then what happens when you start back up? And the danger is, in a restaurant, you have a very short revenue cycle. So in other words, somebody comes in to eat when you open back up, somebody comes in to eat, sits down. By the time they leave the door, you either have cash in hand or a credit card charge. So the revenue cycle is easy. So all the expenses that it took to provide that meal cost, food cost, and labor, you already have the revenue. There is no receivables in the restaurant industry. So it really didn't matter when they got their money because the revenue cycle is very, very short. And you'll see this in a second, but let's talk about a manufacturer. So if the manufacturer takes the money right now and they're shut down for 60 more days, you've now paid your employees to sit at home, which was fine. It's the purpose of the program. But then let's say on day 61, you open back up. Well, manufacturer has to buy materials. They have to receive it. They have to pay employees to do something with it into work in process. And then it sits as finished goods. And then a customer has to decide that they want it. Customer has to purchase it. You have to ship it out to the customer. Then you have to invoice the customer. And then the customer takes 30 days to pay, 45 days to pay, 60 days to pay in this environment. So you may go 3 months building your revenue cycle back up from being shut down. And in that 3 months, you have absolutely no federal assistance because you've now paid everybody to sit at home. So again, it was very important to decide, if you will, when you would take the money. But unfortunately, they came out with guidance that is, you're not going to be able to do that. The guidance that came out, the interim final came out, I believe, on April 2nd, that says once you're approved, you have 10 days to close your loan and receive the funds. And your 60 days starts on the day that the funds are in your bank account. So again, there's a lot of things to keep in mind. But that's kind of where we're at right now. Just real quick, Steve, and I know you may want to comment on a couple of things we talked about this morning, but in reviewing the loan documents that I've seen, and again, it's a SBA standard form, so I think this will be everybody. Understand it's a 6-month deferral. So you'll receive the funds. You have 2 months to spend the funds on the for the approved expenses. And then somewhere between month 2, the 60 days, and 6 months where your first payment is due, you have to apply to the bank for forgiveness. And I'm not sure those logistics have worked out yet. I've seen literature that says, you know, it has to be, you have to keep your bank informed as you go. I haven't seen any literature that says you have 30 days after the 60-day period to apply or else or anything like that. So the logistics of this has to be worked out, but you are signing a loan document, and this will, and all the terms for the 6-month deferral and the 2-year payment after are all in that document straight up front. So it's not, you'll get the loans, you'll spend it, you report to the bank what went on, and then the note agreement for the remainder, if there is any. It's a note agreement from day one. Now you can still prepay. That's expressly in the law. So if you get to the end, I've had a number of clients say, oh, I don't want another loan on the books. If you get to the end of your 60 days and 6-month deferrals, you can prepay it without penalty. But you do have to, you may have to keep the bank on notice. There was something in the loan documents that said if it's over 20% balance that you're going to prepay, you have to provide notice to the bank. So just keep that in mind. And Steve, I don't know if you want to comment on the 60-day period that you know, we had the conversation this morning, if you want to just take a minute and comment on that.
Yeah, like we mentioned early on, everything is changing day by day. So I did hear specifically to what Brent was talking about is that you know, the businesses that are closed right now, you know, and they're starting to get their loan money. So this period, this 8-week period starts as soon as that money gets into the bank account. So what I did hear this morning as a possibility, and because they, you know, realize that this is an issue for many businesses out there, that they might consider extending that for a 12-week period. So making that 8-week period go to 12 weeks. And, you know, possibly the business owner then could pick which 8-week period in that 12-week period they want to use. That might be a possibility. But all that to say is, you know, these things are changing, and we don't have the final information on how this forgiveness is going to work. You know, I see a lot of questions coming in, and hopefully we'll get to answer some of those as we go. You know, at a point in time, we can talk about some of these things. But, you know, one that I just saw come through is, you know, can employee bonuses be used for this, you know, time period? And that's, you know, one of the things that we've been talking about, you know, within our office. You know, can you pay an employee more, you know, and over this period of time? It's just really not information out there. We know that you can't reduce their salary by more than 25%. So hopefully some of this will be answered as we get some more guidance, and hopefully they will start putting that out there for us. But, you know, at this time, we'll just have to use our best judgment as to what the law, what, you know, this law has intended.
All right, Steve, thanks. Just a point of clarification is, yes, you cannot reduce salaries by more than 25%, but that is for people earning an annualized 100,000 or less. So if you have somebody that's being paid 400,000, you can reduce their salary to 100,000 and you would not get penalized for doing that. Over 100, you can reduce or keep or do whatever you want. But under 100 is where that 25% comes in. So what we're seeing right now in terms, it's just kind of a mess a little bit in terms of, you know, different banks. I had a client yesterday that was finally able to apply, two clients yesterday. One was finally able to apply with Wells Fargo. I think their troubles have been widely documented. Santander just opened up their application to one of my clients yesterday. as well. The last I heard, KeyBank was shut down and not taking any more applications, even for their current customers. I think the three, what I call locals, the Univest, the Harleysville Savings, and QNB, I think they're going fairly smoothly. If you're a customer of theirs, I think they're working their way through the process. I have another local bank I'm not going to name, but you know, they were still asking for a whole lot of documentation the other day, last Wednesday, which really didn't have anything to do with it. But and M&T Bank, I think I've heard an approval. One of our clients got approvals yesterday. So if you're a church, again, you're eligible for the PPP loan. Most of the banks, I don't know any, but there was a question at the beginning with housing allowances. And again, the guidance came out that it was gross pay, and in terms of payroll, housing is part of gross pay. Clergy is kind of a really different monster, and you know, bankers are familiar with payroll, but they don't know payroll intimately, if you will. So a couple things were worth throwing them around. So Steve, do you have any further comments, I guess, on any of the banks that we know of or are dealing with? And then if you are ready to take a couple questions, we can.
Yeah, I've been trying to respond to a couple of them. But yeah, as far as the banks go, I still know that there's banks out there that aren't calculating the payroll correctly. Again, I know the AICPA put out documentation that on the proper calculation of what is considered payroll and wages for that purpose. And I know that there's still some that insist on using a method that isn't correct. So, you know, unfortunately, we just, you know, you just have to go with it, because they're the ones that are approving the loan, but it's not correct per se. So hopefully, you know, if they're you know, using, hopefully they'll be consistent when it comes to the forgiveness as to what they calculate. So if they're giving you a lower amount of a loan than what you're should be eligible for, that they're you know, going to use the same methodology when they let you know what they're going to forgive. But anyway, that's what I have there. Yeah, I know there's some questions I see coming through that, you know, has anybody been funded yet? And I know we have some clients that have been already. Would you agree on that, Brent?
Yeah, I know of a couple, not a whole lot yet. I know of a whole lot of approvals, but the funding, again, will be within the 10-day period from the calendar days from the approval.
Right. So they'll be starting, I would imagine, you know, really, you know, pretty quickly over the next week or so.
Yeah, just looking on some of the questions too. Okay, so yeah, we've had clients that have been funded. People are starting to get funded, and this is the first round. So this is the applications that were turned in April 3rd are just getting funded right now. How much of the loan can be used for lease and utility payments? Technically, for forgiveness purposes, that would be limited to 25%. We'll get into that a little bit later. And you know, a couple of our participants have said they've been funded. So just to remind everybody, if you're chatting to everybody, that means everybody. So if you want to chat to Steve or myself privately, just make sure you choose that before you hit the send button or start typing. All right.
I did see, Brent, I saw another question on the $100,000 of, oh, looks like your next slide's going to get to that. Maybe we'll just wait till you answer that on your slide.
Yeah, I think we're gonna give me a couple slides to go through, and I think we're really gonna camp out here in about 4 slides for a little bit. So this is important. I'm sure you've been talked through on this, heard it, you know, signed the documents. It's in the loan documents and all the guidance and stuff. But I want to go through this because there's a couple nuances here. So your 60-day period begins on the date of the proceeds hitting your bank account. And there is a question in terms of, okay, so we have those expenses, but are we on the cash basis? Is it just expenses that we pay within the 60 days, or incurred and paid in the 60 days, or occurred and or paid in the 60 days? Now, reading right out of the CARES Act, and this isn't really clear itself, but it says forgiveness. An eligible recipient shall be eligible for forgiveness of indebtedness on a covered loan in the amount equal to the sum of the following cost incurred and payments made during the covered period. So again, is it a incurred and paid? Because then you'd have to have both within the 60 days. So if you don't get it paid on day 60, you're out of luck. Or is it incurred? So I know Glenn emailed a question in the other day, which was a really good one, in that, okay, if you're funded on April 13th, but you have a payroll on April 17th that represents March, is that part of the forgiveness calculation? And the question, or the answer is, again, we don't know, because all the subsequent guidance and the frequently asked questions and everything comes out sort of speaks to cash basis, in that it just has to be paid within the 60 days. So again, there's a question here, you know, if it's incurred and paid, so you won't get that credit for that payroll on April 16, 17 here, but then you jump ahead to 60 days, you have your last week of the 8-week period. Well, that's incurred, but that's not going to be paid until the week after the 60 days. So you're going to lose a payroll at the end. And again, to Steve's point, the purpose of the program, we have to keep in mind, was to pay employees. So it doesn't seem logical that we would chop off a pay at the beginning of the 60 days and chop off a pay at the end. So again, guidance is really going to have to come out and let us know. What we can tell you is until we know differently, we would include it within the forgivable expenses in the calculation. Now, even that payroll cost defined here, all right, again, the employees are capped at 100,000 annualized. So if you have somebody on the payroll making 400,000, that's not going to count towards forgiveness. The PTO and the FMLA that we spoke about at the beginning, that does not count. So if you're getting reimbursed from the government for those 2 items, that has to be pulled out of your payroll. And we have to be careful on taxes. The only tax that is allowed is the Pennsylvania unemployment compensation. Right now, the way it's written,
that's inside of Pennsylvania, Brent, right?
Yeah. Yep,
in another state that would have a tax that the that the employer would pay, that would also be included. But inside of PA, it's PA unemployment.
Yep. So right now, the way it's written, the interim final guidance that came out on April 2nd, right now, both sides of the FICA are excluded from the definition of payroll costs, we think. That's what's caused a lot of trouble with the calculation of the wages at the beginning. Is there's verbiage in that interim final that says payroll costs do not include both sides of the FICA from period of February 15 to June 30th of 2020. And that caused confusion because it was listed under kind of verbiage under how much can I borrow, or definition of cost under how much I can borrow. So that's why all your national payroll processors came out and made all the reports that ended up being wrong and stuff. Again, what we're interpreting is the government doesn't want to give you money to pay the government. So again, that's probably why both sides of the FICA, and I believe right now it's even worded federal withholding. I strongly suspect that's going to be revised because the federal withholding is just a withholding on the employee like any other withholding. And potentially both sides of the FICA tax, if you lent on gross, you probably, and there is a movement to getting out there that says we want forgiveness on gross wages as well. So continuation of employee benefit plans. Again,
Brent, could I just add a comment on the 100,000 annual cap?
Yeah.
There was a lot of question on that when it first came out also. Is that just salary, or does that include salary and benefits as far as health insurance and pension contribution and that? That has been clarified that 100,000 cap is just on salary, and then health insurance and other benefits are on top of that.
Yeah, and so the other cost here, thanks Steve, is the employee benefit plans, and this has to be the employer net cost. So if you have withholding from your employees to cover part of their health insurance, only the net cost would be applicable for forgiveness because it was on the borrowing side as well. And then retirement, there's a whole conversation on this, and it goes back to the incurred and paid. A lot of people pay their retirement this time of year with, their corporate return or their business return. They pay it this time of year. So is it money that's paid out that was for last year? Do we have to make deposits on these 2 months for costs that were incurred for the 2 months? Do we have to pre-fund it? Again, there's no guidance. I shouldn't say no, but there's very, very little guidance on the forgiveness. Now, the interim final that was issued on April 2nd does say expressly that the SBA is going to issue guidance, at some point in the future on forgiveness calculations. So rent and utilities, these would be business related. And again, the last 2 bullet points, only the interest portion on business debts or business mortgages incurred prior to February 15th. So they didn't want you running out and getting loans and then having to pay loans on, new loans. And the interest makes sense because, again, if you're paying principal, you're enriching yourself. So it's only the interest portion. So again, there's a lot of little nuances here, which again leads into my next slide. I said is, the idea is out there to have a separate bank account, have these funds put into a separate bank account and, draw from there. And I can't disagree with that, but again, that's going to come with a lot of logistical challenges in that, only the interest portion of the loan and only certain wages, not FICA currently, not federal withholding, those type of things. Maybe you have your rent withdrawn from your checking account automatically. So again, you can't really call up your payroll company and say, oh, for these next 8 weeks, I would like X to come out here, Y to come out there, Z to come out there, and then write 2 checks for every note payment, 1 for interest, 1 for principal. Again, it would become a little bit of a tracking issue. But again, it's not a bad idea if you want to deposit into a separate account and then just keep track. You reimburse your checking account for the interest portion. You reimburse your checking for the correct amount of payroll. You reimburse over to others and keep track of what those reimbursements are. Again, it's encouraged maybe a little bit. I can go either way. I know a lot of you have been advised by Steve, Mike, or George, and I don't want to contrary to them at all. But understand if you do, it's still not a grand slam in that you're going to have to keep track of some things. There was other confusion too in terms of what, again, was borrowed. And Steve kind of mentioned this in that, a lot of banks had different measures of what wages were. And if you applied and were funded on box 1, what's called box 1 wages, and that's federal wages, if you have a pre-tax health plan or retirement, you didn't get as much as you could. But the silver lining is it's going to increase if we use gross. It's going to increase your forgiveness in terms of the dollars. So, but I think most of that confusion has kind of calmed down for the most part. And then one of the other webinars that Steve and I sat in, they kind of made a comment that some of the banks were doing these on their own forms, which again, the bank has forms written for the bank's protection. And a lot of what is normally in there is sureties and guarantees and collateral and credit worthiness. All that was thrown out the window with this. And the SBA did come out with a standard documentation. So when you do get your note, there's a big box at the top that has SBA that's, I think, about 17 pages or so. And that would be about it. So if you don't have that, I would maybe encourage you to discuss with your banker and stuff, but I can't imagine that they would not be using their SBA forms. So
yeah, Brent, as far as that separate bank account, I was on several webinars that had attorneys on the webinar, and they strongly suggested the separate bank account just because of you want to be able to track where your expenses went for the use of the money, and also to show that the money was not used for a purpose that is not covered under the loan, which would the government, even though it's providing the government is guaranteeing this and not the individual borrower, but they can still prosecute for fraud. So that's the thought behind that. That it's just a strong suggestion to use a separate bank account.
Yeah, and I think it would be better than not, for sure. So with that understanding, and again, I think we're going to camp out here for a little bit in a couple slides, but to go through the forgiveness, again, the cost incurred and paid is really a big question at this point. What we do know is, the costs that are eligible and the components that are eligible. We know companies cannot reduce their headcount. And then we talked about that cannot reduce salaries of employees earning 100,000 or less over 25%. And again, I'm not sure if this is going to be per employee or in total, because all three of these are going to have to play together at some point. So the very, very basic examples out there, you know, again, if you had 10 employees during your period that you have used to apply for, and now you have 8 employees, well, 20% of that loan is not eligible for forgiveness. So again, these three have to play with each other, and I'm not exactly sure how yet. I don't think anybody has a really good idea on just how yet. The one thing that is expressly stated is that companies cannot prepay any expenses. That's expressly stated in the guidance. So you can't prepay rent or your mortgage or anything like that. So just keep that in mind. I'm going to skip over this slide, but again, there is a formula driven for the number of employees. So you need to keep track of hours and compare that to 1 or 2 other periods of time as your base period. So again, for now, don't worry about the formula. We'll get out more guidance when it comes out and have examples and planning opportunities and all that. But no, they're the three things. One is really what are the dollars being spent on. 2, you can't reduce your head count. And 3, in terms of the 25% wage threshold, if you will. So those 3 things have to play together. So for right now, we're just kind of advocating a steady as you go kind of mentality or MO until some guidance has to come out. The AICPA, the American Institute, is working on a standard form for forgiveness calculations, and that would be great if that would come out. I know the bankers would appreciate it for sure. I had already been having the idea to have a standard form for our clients, and one of the local banks reached out to us and asked us to work on a standard form. So we think that something should be forthcoming for kind of the form / calculation, but unfortunately we're not quite there yet. One last thing, you know, again, if your employees are laid off right now and you can bring them back with this money, you technically do not have to bring back the same employees. So if you have line workers that you don't want to bring back and you want to hire salesmen, you can do that. It's based on the head count. Now, how that relates to salary, you can't reduce your salary. So this is a little backwards maybe, but if you had a line worker making 50,000 and you hire a salesman at, well, I guess the other way, lineman making 90,000 and you hire a salesman at 50,000, you've gotten rid of $40,000 of expense, but not for an employee, if you will. So again, all these things have to be worked out and guidance has to come out at this point. My last thoughts for forgiveness, and then I'll maybe toss it over to Steve after this slide for some further questions. But the banks, in terms of the forgiveness, it says expressly in there, can lenders rely on borrowing documents for loan forgiveness? And the answer is yes. And this is right out. The lender does not need to conduct any verification of the borrower submits documentation and basically makes a certification that it's true and correct and stuff. So I have here, you are responsible for giving the bank the accounting. And again, we're advocating for some kind of standard form, if you will, to help everybody out. As it stands right now, the forgiveness of the loan is not going to be taxable income, I believe. And again, this is kind of contrary in some of the guidance that was released. And actually the CARES Act, I think itself, said any debt that's forgiven shall not be included in gross income. So that says their intent is not to tax it. But if you look at the actual tax law, forgiveness of debt is taxable. So again, I think there's some cleaning up, but I suspect that it's not going to be taxable. Right now, again, here we go contrary. The expenses are deductible, but if you look in the tax code itself, it says any expenses paid with forgiven debt or something to that are not deductible because you didn't pay for them. So again, I think some clarity has to come out and some modifications have to come out. And again, this is very early. This is all that stuff that would have been taken care of in the period normally between the passing of the law and the effective date. So how you account for this on your own records, again, I would include right now, since it is a loan, I would potentially either classify it as a loan on your balance sheet or miscellaneous income, but just be careful not to dump it into a taxable category that your accountant knows at the end of the year what is not taxable. Because the loan forgiveness, the forgiveness portion is going to have to be income on your financial statements, but it's not going to be taxable income. So one last thing, again, we're talking federal. So here we go with the states. What are the states going to do with this loan forgiveness? Pennsylvania, interesting, is if you're a C Corp, they have what's called a rolling enforcement, if you will, with federal. So whatever the federal adopts, the Pennsylvania state for C Corps adopts automatically because it follows federal. Pennsylvania does not necessarily follow federal on individuals. And when I say individuals, I mean pass-through entities of corporations, S Corps, and partnerships. So the good news is Pennsylvania starts with federal in these cases and then makes express adjustments. They have to expressly say that it's an adjustment for PA. So I don't know how all that's going to pan out, but it's a interesting thought. So Steve, I'll turn it back over to you for a little bit on some of the forgiveness stuff or some of the questions that you may want to go through.
Yeah, so on the piece that you brought up on the expenses being tax deductible, yeah, there's a section of the Internal Revenue Code, section 265, which provides that expenses allocable to tax-exempt income are not deductible. So what this code section does in the code prevents double dipping so that you're not taking an expense on income that wasn't taxable. But I believe what the intent of this law was that the expenses would still be deductible. So we may need to get some guidance from the IRS on that code section to clarify this at some point. And they've changed this previously. They've done it before, so it's certainly not out of the question that they would do that. I do believe, the intent is to make it, non-taxable and then also be able to deduct the expenses, but that's something we'll have to wait on. Also, when you were talking about the costs incurred and payments made, I think you covered that, and that it does seem to be on the cash method of accounting. But what we've talked to our payroll department, and they've advised us that they can change the frequency of our our clients' payrolls, if we want to. So if they were normally a semi, paid every twice a month, let's say, that we would be able to, pay more frequently, every 2 weeks or every week, if needed, to make sure we get all the expenses that we can into that period. So that's a possibility there, to check with payroll companies to see if they can make payroll more frequently. All right.
Do you have any questions? I have a couple if you want me to take them, and then you can.
Yeah, let's see. Oh,
they
you know
came
what?
to me privately, so.
I need to, looks like I need to page down. I got some here that I didn't see. Okay, go ahead if you see some.
Okay, so I have one question that says, if I'm behind a month on, on rent, can I catch up with the PPP loan? Again, there's no guidance. If it's on the cash basis, it seems like you would. Now, just be careful. Rent is part of your 25% that you're allowed outside of payroll. But in addition, there's nothing, and Steve, you can correct me if I'm wrong, but there's nothing that speaks to related parties as being any different than unrelated parties at this point. Because I know a lot of you pay rent to yourself. So there's nothing out there yet that speaks to either related parties or catching up with back expenses. And again, that would be decided on the cash versus the incurred and paid basis guidance that's coming out. I will say, I'm planning on doing another one of these when that guidance comes out, because I think that will be substantial. And, again, a lot of people will be interested. I hope not for an hour and a half or this deep, but, I will make sure I have everybody's email on the list to go out when we do this again.
Yeah.
Another question that says, I put myself on payroll. Should I put myself on payroll? Normally, I am not on payroll. Also, should I put the owner on payroll? This is a single member LLC, so you can put your spouse on payroll, and if your spouse is working, they should be on payroll. Again, I don't think there's any guidance out there that says you can't, so yes, but the owner of a single member LLC or a sole proprietor, we'll get into that in a second, they cannot be on payroll because the entity is no different than the individual for legal purposes, so you can't pay yourself from a tax standpoint. So it depends on your ownership structure, but on this case, the answer is put yourself on payroll, yes, as the spouse, but the owner cannot be on payroll. So, and then again, somebody's asking for the PowerPoint presentation. I will send that back out to you. I'll make sure that gets back out. Steve, do you have any questions you want to head over?
Yeah, let's see. What is the date that you can't reduce headcount? I'm not sure specifically on what the question is there, but there is a period. So it's a period of 30 days from the CARES Act, which was, help me out, Brent, I think March the 20th. So 30 days from that point to April the 20th, where if you had laid people off, you can then bring them back by the end of the June 30 period and still qualify for the forgiveness.
Yeah, I would add a couple things. The number of employees that you put on the application was intended to be the baseline, but that was very confusing and there was absolutely no guidance on that until a week into the application process. But I believe your employees for the 60-day period that you have your funding is going to be compared to one of two time periods potentially. And that is, February 15th of 19 to June 30th of 19, or 1/1/20 to 12/29/20, or I'm sorry, not 12, 2/29/20. That was in the slide 12 that I kind of skipped over because you will have your base period, the 60 days, but you will have to compare that to one or two other prior periods. And I think the number on the application was supposed to serve that purpose, but I don't think it's accurate. So I think there's going to be a lot of clarification that comes out in this area. But I would, again, it's a little contrary because the verbiage says by June 30th, you got to bring these people back. So do you bring them back? You can't bring them back June 29th and all of a sudden have a full-time equivalent for the past 2 months, if they didn't get paid. So I'm not, again, the verbiage between things is a little confusing. Steve, we can kind of talk this out if you want, but again, I would encourage, if you received your funding, I would encourage you to put your employees back on payroll the week or the day that they got funding, unless you feel differently, Steve.
No, I mean, I think that's what you would need to do probably at this point is try, get them on the payroll so that you can, satisfy those requirements to have, the 75% of the payroll met.
Exactly. So another couple things I would add is I know a couple of my clients struggled with putting their employees on unemployment, and I'm telling them if there is no work, they belong on unemployment. And right now it's a win-win situation in that the federal is kicking in $600 a week and through, I believe it's July 31st or June 30, I forget which month, I'm sorry. But if you're eligible for $1 of Pennsylvania unemployment, Fed's going to kick in $600. So if you're only eligible for $1 in PA, you're going to come out with $601. And because of that bonus, if you will, the federal amount kicking in, a lot of people are going to make more, unfortunately, on unemployment than they are working. I know 3 individuals right now I could name that are in that bucket. So and the win-win, the other part is your experience rate does not get adjusted right now either for unemployment as the employer. So if there is no work, they belong on unemployment. Once you get funded, you need to bring them back. If we're still,
I'm sorry, Brent, that date is July 31.
Okay, thanks,
so,
Steve.
Additional 600 per week until July 31.
Yeah. So I'm not sure if you have any other questions. I have 1 or 2. On the employee count with sole proprietorships, it's just you. If you don't have payroll in a sole proprietorship, you're in good shape, and we'll get into that in a second.
There's one that came through a single member as an S corp, and yeah, so if you're an S corp and you're on the payroll as the owner shareholder, yes, you can pay yourself, and that payroll would be used in the forgiveness amount as long as it's under the the $100,000 annual amount.
Okay. People that sent me privately, Ryan and Nate, I either just answered or we will answer your question. Karen, is the employee responsible for income taxes on the unemployment and the $600? Yes, that will be taxable income to them. And then I have one that was asking about a temp agency. They have temps, Steve, and if they would count towards either the employee count or loan forgiveness. And I think there was guidance out just the other day that said yes. Am I correct on that, or are we not sure at this point?
I believe you're correct that those employees from a temp agency would also count in the calculation of, of the wages.
Okay. As we know today,
Yes.
everything that we speak of will be obsolete by the time this meeting is over. So just understand that. So, okay, Steve, should we?
There's one Brent, there's one question here. Do we have to keep same FTE count or 75% of the FTE count? And correct me, Brent, if I say something incorrectly, but I would say that FTE count has to be the same as when you applied. The 75% comes in when you're calculating what's forgivable, and you have to have 75% of the wages of the payroll piece.
Yeah, the 75 is for wages, and the FTE count has to remain the same. But again, I think there's going to be leeway there because I have to imagine a lot of the applications were not correctly done on that box. So, all right, Steve, I think we got to watch our time. Actually, sorry, went ahead. So really quickly, if there's any amounts remaining after the forgiveness, hopefully we're all familiar at this point, there was a 6-month deferral from the date of funding to the first payment. So that it's not 6 months after your 60-day period, it's 6 months from the date of funding. That'll be in your loan docs. It's a fixed 1% interest rate, and it'll be a 2-year term for any amounts that are left over.
But the interest accrues from the beginning. So
Yeah.
the interest isn't deferred per se. The interest accrues from the date that you were funded.
And that's a great point, Steve. And that is eligible for forgiveness as well. So you're not going to necessarily have to pay the interest. So sole proprietors, really quickly, but again, the guidance was put out yesterday or the day before. Your borrowing capacity is based on your 2019 income, basically your Schedule C income. All right. So if you do not have employees, for conversation's sake, you would take your income from Schedule C, line 31, divide that by 12 and multiply by 2.5, and that is your funding, funding availability. Now, remember, you're borrowing 2.5, but your forgiveness is also, and this is brand new as of 2 days ago, your forgiveness is also based on 2019 income. There is all sorts of speculation on how do we measure payroll in a sole proprietorship. Is it, are we going to have some kind of gross receipts or 2020 income calculation? They came out yesterday and said that it will be both borrowing capacity and forgiven based on 2019. So this is very, very different than businesses with payroll, corporations, partnerships. The forgiveness is very mechanical, very automatic, and very predictable to the penny. with sole proprietors that may not have those other qualified expenses, the rent and the utilities and the loan payments, if you will. So if you don't have any of those other qualified expenses, there is inherently going to be that 0.5 that is not forgiven. But sole proprietors did get a little bit of clarity yesterday. Not that there aren't remaining questions, but it is basically for sole proprietors without payroll, it's on autopilot at this time.
Yeah, I just read a great great quote on what the information that the SBA put out yesterday. And it says something like, you have to hand it to the SBA. It has done a remarkable job of providing answers to questions that only create more questions. So there is a piece in this explanation that came out yesterday that, you know, questions whether that you can, as a self-employed person, whether you can use mortgage interest, rent, and utilities as part of that forgiveness. So that's what they were alluding to. And so it appears as though if you have those, that also qualifies for forgiveness, but they really jumbled up the wording on that section and made it really confusing.
Yeah, and one last note on the guidance that did come out yesterday for sole proprietors. They said if you did not claim any of those other expenses, the utilities, the rent, you cannot use them for forgiveness purposes in 2020 here. So just keep that in mind. You can't all of a sudden have expenses on a sole proprietorship. So, okay. So I just want to go over a couple of other things really quickly. You know, I see our time, we're really almost out, and that's fine. I want to go through these really, really quick because I want you to be aware of them, but your PPP will affect this, and you're going to have to decide on a few things here, and you'll see in a second. But I just put the first one up there. You know, pretty much any county, some cities, Philadelphia, San Francisco, a lot of cities, a lot of groups may have their own grant programs. So, you know, do your research, look into them a little bit. The EIDL loans, we're going to talk about them for a minute here because they're the other part of this. And Steve, you can jump in maybe at the end of the EIDL with that sheet you wanted to kind of go over a little bit. There's other credits out there, the employee retention credit and elective deferral of the employer FICA taxes. A lot of our attention as accountants and advisors got focused on the PPP because that was free money and happening very quickly. But I don't want these other things to come into conversation without us telling you. And then IRC 139 disaster relief provisions. Just make a comment about that. But the EIDL loans, these existed prior to the CARES Act, all right? But the CARES Act streamlined the process, kind of carved it out a little bit and made a streamlined process. They got rid of the credit elsewhere requirement that's normally associated with SBA loans, and some of these loans can be approved solely on the credit score of the owner. You would apply for these right through the SBA website. You get an initial grant, which I'll go over in a second, but then you will work with somebody and they will decide based on your size and type of the business what your loan is. So they will work with you. Anything over $25,000 in loans would need collateral requirements, and anything over $200,000 will require a personal guarantee. Repayment of these are on the borrower's ability, but can be up to 30 years. So that SBA associate is going to work with you, representative is going to work with you. You'll decide the term and how much the borrowing you're eligible for. The interest rates right now would be 3.75 fixed, Now, this is breaking. I think yesterday we finally got some authoritative, and I didn't make it to the slides this morning. But you can request up to a $10,000 emergency grant, and that before all the care stuff was a flat $10,000, no matter what. Here it is. We'll work with you, and then that $10,000 became a grant, even if you weren't eligible for a loan. But the SBA kind of changed that now. I don't know if this is going to be a bit of an issue, but they're changing it now to be capped at $1,000 per employee and up to $10,000 max. So I don't know how they're viewing sole proprietorships in this case. Sole proprietorships would be eligible for this, so I don't know how that factors in.
So Brent, I think if you have a sole proprietor with no employees,
yeah,
then it would be they would probably just get the 1,000.
Yeah.
And then if
I just don't want to say that right now.
What's that?
I just didn't want to say that right now because that's bad news for a lot of people, and I understand.
Yeah, I mean, we went into this thinking that everybody was going to get the 10,000, and that's how they had it worded specifically on their website. But that changed, and yeah, so if they're self-employed with payroll, they would get, the self-employed person plus however many they have on payroll.
Yeah.
So yeah, that was not, good news to hear the other day.
Yeah, Steve, and I think we just had a question come in. The SBA 7A mortgages are being paid by SBA for 6 months, and I believe that is the case, correct?
That is correct, and that was one of the items I was going to bring up. So if you have an existing 7A mortgage with SBA, that will be covered by the government for 6 months. So you would, I don't know what the procedure is for that, how to get that. You might need to reach out to your lender to speak to them about it. But I do have, and maybe Brent, we can get this chart out to everyone after the afterwards. And it lists all the different SBA loans with what they cover, and it's kind of a real nice chart. But as far as the EIDL loan, I would encourage any business that's out there to go ahead and apply for this. It's a relatively simple application on the SBA website. You can apply for this loan also in addition to the PPP.
Okay. For these disaster loans, you have to provide, evidence of an economic injury, and, you can basically interpret that as a loss of revenue. So if you have a substantial loss of revenue, you should be eligible. These things, you got to be careful. Can be used for fixed debts and payroll, but here's the key is accounts payable and other. So you can't double dip. We've talked about that a little bit, but fixed debts and payroll, you're having covered right now through the PPP loan. But accounts payable, material costs, any other operating expenses, non-utilities or anything like that, these loans can be used for. So you can coordinate this with the PPP loan if you can get funded by the end of your 60 days. You'll have to do it. But this program, the EIDL streamlined process, goes through December 31st of this year. So I would potentially encourage you, once you have your 60-day period, maybe to think of this after the 60-day period for a longer term solution, if you will. Um, you
One,
can't just give me 30 seconds, Steve. You can't
sure.
use these basically to enrich yourself. The refinancing of any debt or acquiring new assets that you can turn around and sell, repair or replace a physical property, which would be beneficial to the owner, if you will, and then owner compensation, distributions, and such. So again, you can't enrich yourself with this. Go ahead, Steve.
Yeah, so I just wanted to point out one difference between the EIDL and the PPP on mortgage payments. The PPP loan is for interest only on mortgage payments. The EIDL loan can be used for principal and interest. So that would cover your full mortgage payment.
Okay, thanks. Yeah, that's important. And again, these can be used in conjunction with each other, or in my opinion, the EIDL can pick up after the PPP loan period, if you will. Employer retention credit. You may have heard of this really quickly. It's not available if you have loans forgiven under the PPP program. So right now, if you're going through the PPP program, the retention credit isn't necessarily for you. And I say necessarily, we'll come back to that. And that's why we may have not addressed it fully with you or mentioned it at all. Again, because our focus is on the free money. This is free in terms of a credit. You know, it's fully refundable against the employer FICA taxes. And this would go from March 21st to December 31st. Not available for self-employed individuals. This is capped at 50% of the wages paid to an employee up to a maximum of $10,000 per employee. So if you have, basically, if you can do the math, you're capped at $5,000 per employee. And again, you're only eligible if a fully or partial shutdown due to federal or state restrictions, and you have more than a 50% drop in revenue compared to the same calendar quarter in the previous year. And this is going to continue until the later of December 31st of this year, or revenues for the current quarter exceed 80% of the previous year. So again, if we open back up and third quarter runs around and you're fully ramped up and going again, this credit goes away. But you can run it out to the end of the year if things stay under 80% of the previous year. The other one I want to talk about really quick is the deferral of payroll tax. And again, we're talking Social Security tax for both the credit and the deferral. We're talking about the employer's share only, not the employee withholding. This tax deferral, you can defer up to 50% of the Social Security tax. Again, the employer portion, and that would become due 12/31/21 of next year. 12/31 of 22 would be the other half. So whatever you defer, cut it in half. Half's due 12/31/21, half is due 12/31/22. This is available to self-employed individuals. So practically everybody's eligible for this. But again, this is not eligible if you've had any loan forgiveness under the EIDL or PPP programs. Now, yesterday, I think there was guidance of IRS frequently asked questions that said you're eligible for this before you have your forgiveness. So you may be eligible for either the retention credit or the deferral before the forgiveness, but then if you choose to be forgiven under the PPP, then it goes away. So all these things have to play nice with each other and no double dipping. And honestly, accountants, bankers, payroll processors, we're all pulling our hair out at this point. Because again, we thought that you were ineligible for if you were applying for PPP to either defer or get the credit, but now they're saying you're eligible before. So again, you're going to have all these things going on, and we need time, a little bit of time to digest all this. So again, keep it in mind, these due dates, the 12/31, 21, and 22, that you can pay a lump sum. So it's not like it's turned into a 2-year term. You can pay the full amount on 12/31/21 that's due that year. So again, this is something that is available and we probably should consider. And like I said, even companies that use a common paymaster, professional employer organizations, you would know if you have one of these. Even you are eligible, you just have to talk and work with the person that does your payroll. Again, these are all brand new. There's new forms, there's new software, there's pen to put to paper yet. So again, we're trying to be on top of this as best we can and advise you, but it's going to take just a little bit of time. Very last thing, I'm 1 minute over. So employers wishing to aid employees, and that may not be you if you're applying for the PPP loan, you're saying, well, I'm uncertain. But if you find yourself in good shape and want to assist your employees, you can do so tax-free through this IRC 139. Now, this is, the whole country is eligible because the whole country has been declared a national disaster, as sad as that is. So you can help them this way, perhaps again later in the year if you so decide to do that before the disaster period's closed. So you can pay them, basically get the deduction for yourself. They don't have to pick it up as income, but you can pay for some of these expenses that you'll see here. And I would just encourage you to use the slides, just read this over if it's of interest. This is not for wage replacement and for any non-essential or luxury items. This has not been tested yet under a pandemic. It was really for, you know, hurricanes, tornadoes, and fires and stuff. This has not been tested under a pandemic, which is a non-physical disaster, if you will. So, Steve, we can take maybe a final round of questions, and you know, if there are still questions, we'll try and get to them, but you can feel free to email myself or Steve. And if you have any review comments, you can send them to the address there. So, Steve, do you have anything to wrap up?
Yeah, that's a good point, Brent. Please feel free to send us any questions that you have. We'll try to go through the list that we have for any that we didn't answer and respond to either you individually or as a group if it would, you know, if it's something that we can, you know, benefit the group. One breaking news story that just came across my computer screen right now was looks like the PPP program has hit its limit. So hopefully Congress will get their act together and get the additional $250 billion pulled together that they were originally asking for last week already. Hopefully they'll get that passed so that we can, you know, the government can keep trying to get businesses back to work. It's really what we need. That 250, it sounds like that might even be on the low side. So I'm sure we're going to keep getting updates, you know, weekly, daily, you know, ongoing, and we'll keep trying to pass that information on to everyone.
Okay. Yeah, I have a couple questions. Nate's asking if the new PTO requirements is for full-time only. Incorrect. If you even have one part-time employee, they're eligible. It's just pro rata. So if they work half a week instead of being, or half 20 hours a week, they're eligible for 40 hours of PTO, not the full 80 for full-time employees. Karen saying, if I understand correctly, partial loan forgiveness is possible. Yeah, that's what we've been talking about for the presentation. Even if you're a sole proprietorship, it's automatic. It's going to happen.
There's one on unemployment, the $600, and if that is taxable, yes, that I would understand that would be taxable, as you know, unemployment in the past has always been taxable to the employee. So I would assume that that would also be taxable.
Okay. Do you know anything about the SBA, Steve? I have a question that says, you know, is it tacked on, are they making the payments or just tacking them on the back of the mortgage, the SBA loans?
Let's see if I see anything.
My impression was that they were actually going to make the payments, but I could be wrong.
I believe so. It's from what I'm looking at the chart that I have in front of me, it is a subsidy from the government, and that would be they would be taking care of that 6-month period.
Okay. Dan is telling me the banks didn't know anything of it yet, but the SBA, when they talk to him, they will automatically take it. But he's saying not to be 100% confirmed on that yet, but it should.
Well, I have one here I see from Karen who says automatically paid the 7A loans, and the borrower did not need to do anything.
Okay. All right, I think that's it that I have here, Steve. You're in good shape?
There may be a few others that we didn't get to, but we certainly will try to get those answered.
Yeah, if I remember correctly, I think there's a way to print the comment or the chat boxes, and we'll try and do that and see what we can do. Again, thank you for being here, letting us do this, to have one conversation instead of one conversation 100 times. We will have more as guidance comes out. I don't know that they'll be this long or this intense or this broad, just really focused on the forgiveness when that comes out. So I will keep the email list, and hopefully you won't mind, but we'll pre-invite everybody here again, because we were maxed out today. So again, if you have any questions or comments, email me directly, Steve. Also, go to our website or info@canoncapital.com. So, all right. Thank you, everybody. Appreciate it.
Thank you. Have a great day.